Why is it not asking me? Yeah, that's just stupid. Oh, well. All right, for some reason, I don't know why. Oops. All right, what is up, everybody? Get going here. Wait for people to show up. I decided to suit up, but I'm not sure how long I'm going to wear my suit today because it's warm. Also, I do not know why this didn't go to the macro ops page, YouTube, because that's the one I would rather use. I don't understand why. That is a mistake. All right, let me turn the actually had the news on this morning to see if people were even realized the difference between a front month and an active month. And it being 420 today, of course I had to dress up because, you know, why not? All right, we're gonna have a look at some of the things people have been talking about, some of the headlines. That could be it, Will. It's the suit. So the whole reason I'm wearing the suit, I'll get into it in a minute. Yeah, something happened with Zoom. Something happened with Zoom that they just, it must have been oh, I'm probably not logged in. That's why I got to be logged into my macro ops. That's why it didn't work. Okay, got that figured out. Yeah, so the story behind the suit, first of all, the suits, I guess I should say. So in 2017, I was living in South Orange County. We were getting married, me and my wife, but we lived together. And I was, let's see, I was basically at Coto de Casa Country Club every single day playing like at least 18 holes of golf, literally every day. If I was anywhere else in the world, I had my golf clubs with me. I played some amazing things. I went for like a two-year period where I played golf at least 18 holes every single day. Some days it was 30, 36, actually maybe at least 9 holes, I guess. But I'd probably spend a couple hours at the course every single day. was about a 15-minute drive from the house. So I'd wake up, do my morning routine, blah, 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 get in the car, drive to the course. And it was just, I knew the hours when nobody would be there, when it would be super crowded. And, I started to get into that like idea, then it was, I'm a golf member. So I'm going to the events now, and, I'm part of the crew, I guess. And, there's certain groups of people that, I'm a sleeved up tattooed guy. Like my whole right arm is sleeved up, or left arm is sleeved up, but I'm that guy who's just golfing every day. And so I'm like, I think I'm going to get into this game. So I like always wanted to have, when I used to wear suits, I always wanted to have the Canales and the Briones and like the really custom bespoke suits. Like I was super into that for no good reason. Like I never really, they're just kind of a waste in my opinion, but it's, so I went out, for the wedding, I decided to splurge, and this is the wedding suit. Actually, this is the whole thing. I got the Canale. I went for Canale for the wedding. Custom shirt, cufflinks, Ferragamo tie, like all the details of an idiot. And since I got that suit, actually, all the suits that I ended up buying since that time that I bought those suits, I've worn, let's see, for the wedding, I wore it. For my wife's birthday a year or two ago, we went out to a show in Vegas and I wore it then. I wore this suit on a conversation with Alex on a phone call. The last time Crude dumped 30% on but not the front contract, the actual tradable contract. And then today, and then I wore one of the suits to a funeral back in January. So that's kind of the whole point. Don't buy suits. They're stupid. Unless there's a reason to wear suits every day. I don't have any reason to wear suits at all. So I had to, when I sold everything, that's something I didn't sell. And so those kind of were sitting in my closet. And yeah, just no reason for it. So anyway, I thought, what the hell? It's Monday. It's 420. Stupid stuff gets done on 420. So I'm going to I'm going to wear my suit. Also, I'm not going to do my hair. I'm just going to get out of the shower and throw my hair whichever direction it goes. And here it is. So that's story time with Chris. Yep. All right. So first things first, hit that like button, please. Hit the like, sure you subscribe. Again, I'm going to be moving to the Macro Ops YouTube channel. So those of you that made it here, thank you. That was a misstep on my part. I absolutely would prefer their channel. They got more people. Why wouldn't I? And so let's have a look at what's going on in markets. So obviously everybody is nutso about Crude and the front month. Yes. So technically speaking, if you want to be accurate about it, then yes, the front month is May because it's April, right? Of course. But the way futures work is there's a number of participants in here. You've got hedgers. So you've got oil producers themselves who are, selling or going short futures on their stuff that they've harvested so that they can lock in a price. And let's say it was at $35 to $50 a month or two or 6 months ago, whenever they did their last hedge. So A lot of firms probably did all right. Not a lot of firms, there are a bunch of firms out there who probably did okay in the hedge. If they have an actual energy hedging program, they might have done okay. But that has to, eventually they have to unwind. And if they've done, if they did it in March or April or February or January, how long out do they hold their hedges? So that's a whole different layer to the energy market. And I'm sure governments and businesses who, like, for example, I think Southwest, they bought an oil refinery because it was just cheaper to do that and provide their own jet fuel than it was to continue to pay for it. So there's a lot of corporate participants in the crude market that actually have real business reasons to do things, right? And it kind of is a little challenging there. Then of course, you have like the people who the governments, like in the Middle East, so Iran, Iraq, China, or not, well, China too, Saudi Arabia, all the oil purchasers or producers, Oman, Qatar, UAE, a lot of those countries, Mexico, produce a lot of oil. And so they need to hedge too sometimes because it's strategic in their, if that's where all your money comes from, of course. Then we got, they're going to have large speculators, I guess is probably where we're actually getting into it. Thank you for the like button, hitting the like things, by the way, guys, appreciate it. Good to see you. Everybody say hi if you're here. Also throw out some questions if you want. Just covering the crude contract, and then I'm going to get into some actual work we've done on crude itself. And trading it and different assets, because that's probably why you pay attention to me, because I actually have some quantitative information on at least what sort of strategies are going to work and what's not going to work, and when and how, and try to quantify the markets in a way that a discretionary trader like ourselves here can probably do it. Okay, so back to crude. So the actual traders, so if you're a crude producer, you probably, and you were hedged, you've probably had a nice little windfall. If you're a T, what's up? Will B-side, what's up? Are the family joining us today, by the way? Hello, Mrs. T and Mrs. B-side, if they are. Probably not. Got tired of me. We got, there might be some firms that actually hedged and are doing okay. Maybe they're transportation companies. There is a big windfall that potentially could have happened here, but I doubt it. What this most likely is there's a bunch of people who are, who don't understand trading, who don't understand that crude is just a horrible asset to trade. It's the worst performing asset in my entire universe of assets to trade. It is, it's, there are some people who can figure it out and do it. And I'm not going to, say that it's impossible to trade. Just saying that the statistical advantage in trading crude is only to be short. So if you're the sort of trader who actually caught this move, and oh, nice. Will, no family today, got your entire office to yourself. We covered this a while ago, and I haven't heard from a couple of the people who were asking about crude back in here. I think when I was like, I don't see anything happening in crude. I figured it was going to bang around. I didn't really think it was going to do anything. When I was getting asked about crude back in this whole February, March timeframe, I really thought we were going to do just more sideways stuff. So when it broke down and continues to break down, then something happened and we flipped into bear volatile. Now, bear volatile, as we recall, is the worst actual market regime to trade. It's high octane, it's fun, it's exciting, and it's built for gamblers. If you're willing to take big risks and really pound, mash the sell button and stay short and be short, I should say, you're going to do decent. But it's not, no chart showing. Oh, it's just me talking crap. Thanks. All right. Today, guys, today. It's like I started 420 early. Okay. Thank you for that, Will. What's up, B. Drew Huggy? I don't know how to say it, but what is up? Okay. Now you're seeing the chart. Now we're looking at crude. Now this is front month. So we've already talked about, we're talking about traders is the only people we're talking about here. I'm not talking about the people who are running. It's the suit also. Don't worry. I'm not a fan of it. I mean, it's fun to wear from time to time. Like today, just for funsies. Okay, so you guys even notice the pocket square going? Cufflinks, sup. Necktie is restricting blood flow. Okay, so when we were basically, let's go back to, for the last year or two, pretty much crude has been in this sideways range. And you popped in and out of bear volatile, bull quiet, but it was mostly just neutral. If you were to come back and take a look at the last, so 2019, yeah, there we go. So like basically 2019 was just a big sideways kerfuffle. We had bear volatile kick in, so we went from 70 down to 35 or 40 or so. So that was obviously what happens. What do you do in a bear volatile? The only thing to do is to short, no long positions, and exiting. You're either, the thing about that makes this one tough, when we look at bear volatile on the S&P, the face ripping rallies intra bear volatile are what kills you in bear volatile. In crude, however, it actually works to sit short. So find any reason to get short, whether you're selling the vol breakout, which works phenomenally in bear volatile, and you can go higher time frames, or you stick with the low time frame and just trade around it off the hourly. Both of those work. It's goofy because when I say bear volatile and you've done your research on bear volatile, then you know, oh yeah, I'm probably just going to trade the 1 hour to 30 minute to 10 minute vol breakout short trade and be in and out throughout the day, right? That's a great strategy for the S&P. That's a great one for indexes and things like that. Doesn't work as well in crude. What works in crude is getting short and staying short. And so you get short on a daily in bear vol. So you didn't even get into bear vol until like right in here where it was too obvious. So you're starting to short around 63. By the time you're in your 40s, it breaks 40 for real. You're like, oh, wow. Okay. That's when you want to start looking for any excuse to get out. And you had a number of excuses, but this capitulative bottom was fairly obvious in hindsight. And so then you get into, once you clear through the bear volatile, then you do this sideways crap for about a year, right? And it provided a number of decent trading setups. The failed vol breakout kind of worked, but that was only when you were in more of a sideways to, just not obviously bear volatile market, just more of a sideways market. It worked okay, but believe it or not, it worked horribly. When you look at it, it looked like it worked fine. It didn't. There were a couple of trades that worked. There were a couple. When Iran bombed the Saudi production, fading that move, it was telling you that. Let's get back to reality here. Let me get to what really was happening. So when Iran bombed the Saudi production facility. This is the move. It gapped like 15%. And when it failed, that was the market telling you that crude is not going to be bought. It's going to get bid up and they're going to dump it. And when it happened, it actually went lower and it attempted to grind back up. And this was probably hedgers. This was probably the bigger institutional money in the oil space kind of bidding this up, and traders, of course, but traders don't have as much of an impact. And then we had the Iran, when they shot missiles at the U.S. base in al-Assad back in Iraq. We had that massive move up. And then what happens? It gets sold off just like massively. If this wasn't a good warning to tell you that they're not looking to buy this thing, and this wasn't a good warning to say, hey, something's not right here, and you're looking to catch oil to ride it back to a 140 or up to 8, like you're getting bullish oil, but you're getting this bad information. And we talked about this during the time. Okay, now you're getting bullish down here again. I know a lot of people were getting very bullish. They were getting into their whole, I'm long-term holding these oil tankers and this stuff. And it's just like, it looks valuable at 40, right? You're down here at 50, I should say. You're seeing it and you're like, yeah, okay, that's cool. And there's no reason to really be scared, right? You've never seen something like this happen, where you wake up one morning, or you fire up your screens and you fire up Crude and it's down 20%. You hadn't really seen that in your lifetime for most traders. So it's very easy to think, okay, that's cool. This is probably a bottom. There's no way this thing stays in the 30s. Like, we haven't seen the 30s forever. There's no way. That's just stupid. But you end up, it's telling you that something's up here. Something's up here. Nobody wants it. And then this happens. And then now you're here thinking, okay, we're in the 20s. This can't go any lower. And that's kind of where we are. Now, this is the Crude March contract, which it should be, we should be looking at. So when you're hearing people say that crude is at $10, okay, so crude is at $10. That's not the contract that's being traded. That's March contract. So let me illustrate. We're just going to go to our handy dandy volume chart. So let's go to energy. I had a better searching. It's going to be faster. This was yeah. It's just natural that I skipped the first return, right? Okay. So what we want to do is we want to look at volume. Okay. Look at your total volume right now on the contract. So if you're a trader and you're thinking to yourself, yeah, I want to trade crude. What's the month? We're in April, so I'm probably going to trade May, right? You might be thinking that. That is 1/3 of the volume of June and the same volume of July. So basically what's happening is everybody on Bloomberg and on Twitter and everywhere else who doesn't actually know the difference between which contract they're trading, they're going to quote spot price, which they're going to quote front month, thinking that they're right. And, if they don't do this, they don't know. So you got to give them the benefit of doubt that they just don't understand that the actively traded contract is this one, 712,000 contracts. So that's this one. You can do CL2 exclamation point in TradingView, and that'll give you the actively traded contract. Okay. And the actively traded contract, yeah, it's down 9% today, but it was down 19% it was down another 19%. It's been down much bigger. It was down 33%, the actively traded contract in March when we had, that big opening down move, the Russia-Saudi war news, whatever. So we're actually only down slightly here today, 9%. Yeah, that's okay. Kind of not out of the ordinary since March started. So the headlines that are being, grabbed there, cool. And you can see now the only opportunity you have is probably on the intraday. So, this was the 17, 16, 17. So this was the open. So this was Friday's close. This was our open. We have a potential, we had a failed vol breakout here, get short, and you're still at break even. But this is pretty much the best trade of crude right now. So this was the signal. This was the coiled up first inside bar, sell short or sell stop below it. I dare you. This is also the other thing about trading, wanting to trade in bear volatile. Like, you're trading at about $20 a barrel right now. Everybody on the news is all they're talking about is $10 a barrel, $9 a barrel, all that sort of stuff. They don't understand this, the trading nuance. And so, it's kind of hard to step in here. This is it's a pretty decent size position that you're going to put on here to get short. So, and also on vol breakouts in the bear volatile, like you got big runners. That's where you make your money in this. Now, also, I want to point out that of all the trading assets that you can trade on the futures market, this is one of the worst. It's absolutely one of the worst markets to trade. Things like lumber, things like pork bellies, orange juice, or things like that are, by definition, you can't even really trade them with normal strategies because, yeah, they back test beautifully and they look like you really want to trade them. And you're like, yeah, I want to add a futures contract. What just happened? I want to add more futures to my universe. So you go through all the CME, CBOE, ICE, or NICE, or whatever they're called these days. And you find the, all these other futures contracts. And you look at lumber and you try to trade that and you can't because the volume, it just gaps up and stays there, or it gap down and stays there. It looks like it trades and looks like it's good. And then you realize the volume's stupid. And then the trading hours are crazy, and it takes it's a lot more difficult to actually trade those than it looks like on screen. So your manual back test will always look amazing. And then you'll see, oh, crude, there's volume. There's a lot of trades that go on, and everybody's talking about crude on Twitter, and like all these people who have all these Twitter followings who started their Twitter accounts in 2008 when we were running to $180 a barrel, and they were the fancy crude people, and they just got so many followers, and people listen to them because they talk about crude or their hashtag OOTT or whatever. And they're smart people doing great things, but it seems it's like so addicting to get into crude because they have this big Twitter following and they seem smart. And no offense to them, but if you're doing this sort of trading, the quantitative trading, where you look at what are your, they trade differently. They trade off different data. We trade here. We focus on finding what works and then trading that, and then not trading what doesn't work, right? This is what doesn't work. Crude doesn't work. It's a really poor product to trade. This is, it's hard to understand when the contracts flip. And it's just a tough product to trade. So no reason to really trade it. I kind of give you my argument and blah, blah, blah. I'm a little, tired today wearing a suit. So, But yeah, there's no edge on trading crude. You're going to spend years going back and forth, maybe getting a 50% win rate, maybe breaking even if you're lucky, and make no mistakes whatsoever. However, the ability to make a mistake in the crude market is dramatic, and sometimes that can work in your favor. And that's usually the people that stay in the crude space, because they have become addicted to those big, massive 6% moves in a quiet market, you know? So it's easy to chase that percentage change if you don't understand position sizing and you don't understand market regimes and, you know, how to take profits in those. If you're trading crude, trade it on the lower time frames, let your winners run, trade the vol breakout exclusively to the downside. Don't try to be a hero. That's the only way it works. And it's still barely break even in the best of conditions. On normal conditions, yeah, it's not even profitable. So it doesn't even make it into my trading universe. So that's what I got for crude. However, then you have this really easy thing to trade called the Nasdaq, which doesn't look like it here, but the market is telling us something. We are in a bull quiet. I think we covered this last week. We did, and I don't have any of my drawings. And they're so far back that I don't even know where to find them. But what we know on the Nasdaq is that though it doesn't look like it's in a bull quiet, because down here it doesn't say it's bull quiet, but it is absolutely trading as if it is in bull quiet territory. Look at how ugly this candle was on Friday. And what happened? Moved back up almost to break even, down 0.3% on the day, up 3%, down 1.5%, up almost 4.5%. You know, every time you have the world's best sell in the, you know, ever failing, that's just more reason to prove we're in a bull market. And so what did I do last night? Very simple. We opened up, where did we open up? Where's my opening here? Here's the open. So basically, and we're in a bull quiet regime because the market's telling it. So what do we do in a bull quiet? What do we need to do? Look for any reason to be long. So we had selling on Friday that got reversed. Okay. Pretty good into the close. That was a big move, 1% move into the close, another 0.5% move prior. So it really wanted to close up near its highs. So all I did is I let the market open, kind of watched what was going on. We had a dump and it started to get bought. Then we had kind of an inside bar, and I was like, yeah, well, that's a you know, a double bottom pattern. Boom. So I put a buy stop here, caught a move up, and I just kind of let it take me out. I know we're doing reversion on this one because it was, for me, it was a weekend trade, so it's a lower volume, a little easier. And yeah, I just kind of, I think somewhere in here I got out when it started to get a little later in the day. I think after that big candle, I was like, okay, this thing's going to rip to new highs. And then this thing happened. And I was like, well, I guess I'm out at, I think it was like 1.5 hour. Yeah. So maybe we can go to a 10-minute, take a look. Maybe it'll be more obvious how it was traded. Boom. Yeah, it was right in here. I got stopped out at 1. So we got, so let's call it 1, 2. It got up to a little over 3 Rs. So I moved my stop up to 1.2, 1.5 R, came down, took me out almost perfectly, and then started putting these crappy things in, which are making me start to get bullish. And then they closed lower and dumped and then reversed. And I was like, yeah, it's time to spend time with wifey instead of being a degenerate gambler. So luckily, since March, that's 4 trades. I'm 4 for 4. That was 1.4. I think I've managed to scrape out 1, 2, 3, 4. So about 5 or 6 R, I think, is what I've gotten in the last month and a half, which is a horrible way to do business. But I haven't lost anything, and I've been able to do a lot more work. So that's more interesting at this point in time than anything else. So hit me with your questions, guys. If you have any. What we're looking at today, I don't even know what people are interested in today. Probably take a look at the currencies. This is what I'm supposed to be at, one to 5 trades a week, and I've only had 4 this month, or 4 in a month and a half. So we're definitely not performing. If you got questions, hit them up. If not, we'll turn you guys loose to go enjoy your 420. We got a number of meetings to be in today, and I'm definitely not going to be wearing a suit. It's tank top time later. It's like 85, 90 degrees outside. So, yep, still no trades. There's a potential trade on Aussie New Zealand. I know a number of you took this one, and on the so Aussie Kiwi, potential failed vol breakout, but that's looking a little too extended. NZD CAD 4 hour, I'll have a look. Yeah, that's potential. That's a potential setup. It would have been a setup, actually. You would have already be short here. I don't trade Kiwi, or I don't trade CAD, actually. I don't really trade Kiwi all that often, or Aussie. Those are least performing for me. So I just kind of stick, stay away. But anyway, yeah, that's I'm sure you've done the work. Thanks for the likes, guys. Appreciate it. So let's go back to seeing if we're going to have anything in the market here. NZD CAD, where are we at? Let's look at the. Now we can use this. This one. Remember, we did the back test of trading bear volatile and bear quiet regimes. So that was a pretty cool experience, going through and getting the back test done, and then us going and doing the work and seeing it. So Nasdaq, the leader of them all, obviously, the only one in quiet sideways, or bull sideways, bull quiet almost. It's trading as a bull quiet, but it is only represented as a sideways market at the moment. The mid caps, the Russell, nothing interesting there. Nothing interesting there. Bonds, that was a trade I took last week. Got out for my little 1.5 R again. So one of my victorious trades, but you see, we are in bull quiet. So it's an interesting one to play. Nikkei, oh, wrong direction, kid. Bonds, ultra bonds. So you're just looking at the market regime, and we're in bull volatile here. So there's a completely different way to trade the short-term duration bonds. Look at that. You think they've got a price figured out there? You think they've got a number that they're interested in on on the 2-year? So this will show you actually. So this is actually, they've rolled to the new contract on crude, as we can see here finally. So yeah, it went down, they rolled it. This is a this is called so this is kind of the downside of using front month in your analysis. Where are we at? Anti-gas. Anti-gas is one of those that doesn't work very well either in most of the strategies, but this was obviously trading in bear volatile right around here. And so it wasn't obvious really at the time, but then that started to happen. Then you're like, okay, now we're bear volatile. So now the only thing that really works is intraday time frame, but also the intraday time frame on the natty gas contract is a little goofy. We are in bull quiet on gold. So the only thing to do is to be long. Find any reason to be long. And this sell-off here was a good enough reason to be long. That's only 1.9%. That's gold. I mean, that's a boring day in gold. That's an average day. So you can pretty much, you have your double top here, right? So that's a short, and that worked. So now what we need to know is if we are in fact in bull quiet, then this failed breakout fails. And then we just keep drifting higher. Now it may bang around a bit before it takes off, but that's the more likely path because of the bull quiet regime. Let's have a look. Copper, nothing interesting. I'll throw my training wheels back on. We were in bear volatile there, but it's trading as if it's in bull quiet. That's interesting. Look, I mean, that's trading just like all the indexes. Not as good as Nasdaq though. Silver trading, same. It's all very highly correlated at the moment. Platinum, palladium, corn, bear volatile, short. We've been talking about being short this thing all pretty much for the last couple of weeks. Corn, just be short on the intraday timeframes. Soy's not looking as bearish. Wheat quite a bit more bullish. And bean oil is the bean complex is starting to get a little sidewaysy. So it looks like corn's the only one to really be trading. And then there's Bitcoin. Not really much going on there. In fact, I like to go to higher time frames though on Bitcoin. So again, it's another nuance of the different market. If you don't know the actual what the features and benefits and returns are on each individual asset in each individual market regime in each individual setup, then you shouldn't be trading it. That's just my opinion. There's no good reason to be trading something just because it's shows up on your screen. You know, you're just gambling on those. You think you have an edge, but you don't actually know if you have an edge or not. So, all right. Any other questions there, guys? If there are, happy to take a look. Otherwise, get off this stupid outfit. Go make my wife look at my hair. All right. Good follow for you there, Burnside. Um, all right. I think that's it then. I don't see any messages in there. Thank you for stopping by today and having a look at my hair and seeing me wear a goofy suit. Got no other reason to wear it these days, so I'm gonna wear it here from time to time. That's it. Okay. Fine. Stop share. That's the hair. That's the hair of coronavirus right there. If coronavirus was a meme, me in a suit, flip flops over there. It is like 90, 85, 90 degrees today. So I'm going to be in shorts and a tank top sitting out on the patio until it gets too warm. And then I'm going to go for a run probably. You got it, AT. I am done here. Hey, who in the group here is doing prop with Maverick? I know Will is. I covered a bunch, but I am mentoring at Maverick. So if you're wanting to get into prop, hit me up, ask me questions. I will be your mentor slightly. All right, y'all.